Imagine hearing the name Pi Network everywhere yet still not really knowing what it is. That's the reality for millions of people. The name is familiar, the app is widespread, but the deeper idea behind it remains something many people have never taken the time to truly understand. At first glance, it seems like just another cryptocurrency, another digital coin trying to stand next to giants like Bitcoin or Ethereum. But the truth is, Pi Network was built on a completely different foundation, one that challenges nearly everything traditional cryptocurrencies were built upon. When Bitcoin first appeared, it introduced the concept of digital money secured through mining. But mining required specialized computers and enormous amounts of electricity. Over time, mining rigs grew bigger, more expensive, and more powerful, turning cryptocurrency into something only people with money and technical knowledge could access. Pi Network stepped into this world with a question that sounded almost too bold. What if digital currency didn't have to be exclusive? What if mining could be simple, free, and available to absolutely anyone, regardless of income, education, or geography? What if the next major global cryptocurrency could be powered by people, not machines? This single idea became Pi Network's foundation. Instead of requiring a room full of hardware or a massive electricity bill, Pi asked users for something far more basic, a smartphone and a few seconds each day. One tap. That was it. And suddenly, people were mining not by solving impossible math problems, but by participating in a social trust system that kept the network secure. For millions, this wasn't just a convenient approach. It was revolutionary. People who had never touched crypto before suddenly found themselves part of something far bigger than they expected. The vision came from two Stanford graduates, Nicholas Kokoles and Xingdiao Fan. They believed cryptocurrency had gone off course. Instead of empowering everyday people, it had turned into a playground for those who already had advantages. Their goal with Pi wasn't to create another digital asset, it was to build a global movement. They wanted students, workers, parents, business owners, farmers, and individuals in developing countries to all have a chance to access cryptocurrency from day one. No learning curve. No upfront investment. No barriers of entry. The app was designed so simply that anyone could open it, tap a button once a day, and become an active participant in a growing ecosystem. But Pi's strategy had another layer that made it unique: trust. While Bitcoin relies on decentralized computers to verify transactions, Pi relies on a decentralized social network built through people vouching for each other. Users could invite friends, build security circles, and strengthen the integrity of the entire system. The more the community connected, the stronger the network became. Every new member wasn't just a user, they were part of the infrastructure that made Pi possible. For years, Pi existed only inside the app. People mined it even though it had no listed price, no exchange value, and no way to move the coins outside the Pi environment. For some, it was just a number on a screen. For others, it was a long-term bet that someday the project would become real. And yet, despite having no real-world value for years, the community continued to grow. Millions of people kept mining daily. They watched their balances increase and held on to belief. It was a global experiment in trust, patience, and hope, and it created one of the largest crypto communities the world had ever seen. The founders believed something straightforward but powerful: build the community first, and the value will follow. And that's exactly what happened. As time passed, excitement grew. People waited for the moment Pi would finally leave the app and step into the real world. Many doubted it would ever happen. Some said Pi was taking too long, or that the project was stuck. But everything changed after 6 years of development, testing, and building. On February 20, 2025, Pi Network officially launched its Open Mainnet. For millions of pioneers, this date became a milestone they had been waiting on for years. Before this, Pi operated inside an enclosed system where coins could only be transferred among users within the app. No exchange listings. No withdrawals. No trading. It was a closed environment designed to test the network's security and scalability. But with the Open Mainnet, those walls finally came down. Pi left the app for the first time. Transfers became possible to external crypto wallets. Exchanges were finally allowed to list it. And with that shift, Pi transformed from a long-term experiment into a functioning cryptocurrency with real value and real-world transactions. But before people could unlock and transfer their mined Pi, there was one more critical step: KYC verification. Without completing identity verification, users' mined Pi remained locked. This step ensured the network complied with global regulations and prevented fraud. For many users, seeing their Pi finally move from the app into their Mainnet wallet for the first time was an emotional moment. What had once been just a balance on a screen was now real digital currency they could actually use, send, and trade. Once Pi hit crypto exchanges, the world paid attention. The long-asked question, "Is Pi real?" disappeared overnight. The new question was, how valuable will it become? Analysts debated. Social media buzzed. Crypto enthusiasts watched the charts closely, curious to see how such a massive community-driven project would behave once exposed to open market forces. The initial excitement was explosive. Pi entered exchanges with a starting price of $1.84. Just days later, it surged above $2.90, sending waves of excitement through the community. Predictions spread rapidly. Some said $10 was possible, others speculated about $50 or more. But crypto markets are unpredictable. As early miners began selling their unlocked Pi, supply increased quickly, and the price faced downward pressure. It followed a pattern seen countless times in crypto history: a surge of hype, a sharp climb, and then a correction as the market balanced out. Some pioneers sold immediately, happy to see real money after years of waiting. Others held onto their coins, believing Pi's future value would rise as the network expanded with real-world use cases. There were mixed emotions: excitement, disappointment, hope, and uncertainty, all happening at once. Pi had finally become real, and the world was now determining its true worth. Pi's massive growth came from its simplicity. While most cryptocurrencies require investment, equipment, or technical skill, Pi asked for nothing but participation. By 2024, the app had over 100 million downloads. Tens of millions mined daily. Families, friends, and entire communities joined through referrals, each person tapping daily to earn small amounts while strengthening the network. For many people, Pi became a daily habit, a tiny action representing a much bigger dream. When Pi finally hit exchanges, everything accelerated. The price movement, the trading volume, the debates, the predictions, all of it transformed Pi from a quiet global project into a public spectacle watched by the entire crypto world. It began at $1.84, peaked near $2.91, and then settled as the market absorbed the sudden wave of supply. This moment didn't simply reveal what Pi was worth today, it marked the beginning of the world discovering what Pi might become tomorrow. Pi Network had finally stepped onto the global stage. Its future would now be shaped not just by hope or anticipation, but by utility, adoption, and the collective decisions of millions of pioneers worldwide.